Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 29th of April. All right, now I hope you had a good Easter break. We now can rip into the currencies without any sort of more holidays getting in the way. Now, just as we start the week, now, first of all, start of the Asian session, very important to understand it is Golden Week in Japan this week. Now, that goes all week, so the Asian session will be a lot quieter than usual. You take the Japanese market out of the whole FX market, and you lose just about half of the volume of traders. So the Asian session is going to be very quiet this week, and that is pretty much how it's starting the start of the week. So just be aware, yen and yen crosses probably not the best pairs to be chasing this week. Now, first of all, let's just have a quick look at the market conditions after Friday's trading. We've still got trending markets. I know there was a lot of not necessarily confusion, but the markets reacted very awkwardly to the US GDP numbers. This is something I'll be going through very closely with the traders meeting at the start of the week. You know, we're trying to work out why didn't the US dollar rally aggressively, and we'll be covering that extensively. But the way the markets are set up, still clear trading conditions. The US dollar, it's taking a bit of a pause, but still moving upwards on the hourly and daily charts. The core market drivers, well, you know what? We've still got China and the US trade issues still in the background. Brexit has taken a real break, which is great to be off the front page of the news. And you can almost see sterling starting to almost coming back into play. Not quite, but almost. Now, let's just have a look at the technical setup for the majors as we start the week. Well, no change from Friday. Okay, US GDP numbers were huge numbers. The PCE price numbers, the inflation numbers were weaker, and that's where that US dollar ended up trading sideways as opposed to rallying aggressively. But still, it hasn't dipped. So the US dollar is still heading north. Dollar CAD with the Bank of Canada gone into a more of a dovish, neutral to dovish stance from the CAD, the Bank of Canada meeting last week. Dollar CAD moving to the top side despite stronger oil. Well, actually, in saying that, oil did move from, this is actually one thing that is a little bit weird. The oil moved from around 65, 66 bucks back to 62.95 just at the moment. So, you know, dollar CAD, I think it's got a lot more room to the top side. It is actually trading a little bit weird at the moment. I'll show you the charts in a second. Dollar Swiss clearly moving to the top side, and a really good setup, which I love, because these currencies, they work or trade really well when they're in sync. Euro, sterling, Aussie, and Kiwi all moving lower. Now, this is going in, joining up with the fundamental perspective, with Euro, Aussie, and the Kiwi central banks all quite neutral to dovish on growth outlook. So this is where the trading outlook really comes into play. Now, just coming back to just start of the week, don't forget. Okay, so we've got Japan, Golden Week. The Asian session is going to be very quiet. Now, Mondays are usually quiet anyway. So when you're looking at the upcoming events, we do have a really good number to start with, the core PCE price index. Now, this is an inflation number that the Fed looks at very closely. Now, we did have the initial numbers on Friday, which were weaker. Now, this is going to be pretty important to really the start of the US dollar for the start of the week. It is still moving topside. And a lot of the other currencies, as I show you the charts in a second, are sort of slightly retracing to where they all broke down. Now, if these US numbers, price index numbers, are weaker, well, that could start to sort of get the dollar drifting lower, and we may see a little relief rally across the board in the other pairs. If the numbers are stronger, well, it corrects that move on Friday, and we should see the US dollar catch up to those strong GDP numbers as we move towards the Fed meeting on Wednesday. All right, so that's all you've got to look forward to today, which is a really good thing, is really the US core PC price index numbers. It's going to be a really good start to the week, as I said, with the lead-in from last Friday's numbers. Now, just a bit of an update before I go to the charts. The traders meeting, okay, it's 10:30 p.m. UK time, so a little bit tough for the European traders. The North American and the Australasian traders should have no problem joining it. Now, we have actually extended the meeting to include the online course and workshop attendees. We had a number of requests from people who have jumped onto the Complete Online Education Program. So you will be able to join that meeting. You should have a separate email with the password to access that. If you don't have one, then by all means jump on support and let us know, and we'll get that to you as soon as possible. Now, other things, I'll also be covering, just one thing too, just with that traders meeting, this is where you can actually sort of learn a few things about what's going on. I'll be covering in detail the price action and the movement of the major currencies after the US GDP figures on Friday. I think it was Thursday actually. So so just be aware, we will be covering this, having a close look at why did the dollar go down, etc. And I'll cover that in extensive detail, as well as run you through the rest of the week. Now, just on a quick note, I mean, if you're looking through the week, it's pretty massive. And when you do have if I just scroll down to sort of Wednesday, if you do have the FOMC, it's always, this is the epicenter of all the financial markets. Everything emanates from this meeting. Now, no change in rates expected. And to me, no change in statement. Press conference, I can't see them doing too much up there either, but we will have a look. I mean, they are basically already set up to say, well, we're going to keep rates on hold until the economic data tells us otherwise. So there's been no change there across the board. Now, one thing you won't see on the economic calendar is the upcoming meetings with between the US and Chinese officials. We'll have to see how that plays out, and we'll get more information probably over the next 24, 48 hours. The Bank of England also coming together on Thursday. That's going to be an important one with Carney speaking. I think he'll be talking about Brexit and how they're going to keep everything on hold, because who the hell knows what's going on in the UK at this point. And then just as you come through the week, we've got obviously the first week of the month. We've got the huge sort of rip-roaring non-farm payrolls. But I'm almost thinking the CPI flash estimate out of the Eurozone, probably a better opportunity than the non-farms. But I'll be covering that in detail through the traders meeting Monday or Tuesday, depending on where you are. All right, now let's just have a quick look at the charts here. There's some really, if you go back to look at the FX Market Insight from the end of last week, you'll see what I was talking about. These currencies here all have a sort of pretty clear downtrend, okay? But, even with the US numbers, if the US numbers were weak, you're looking to sell back to, or I'm looking to sell back towards these resistance levels. Obviously, that Kiwi resistance line sort of blew through there. So you want to get rid of that. And also dollar yen, recognizing dollar yen, especially with Golden Week this week, that price action there is just loose. It's all over the place. No clear trend. Jamming sort of stops on the top side. Jamming stops on the downside. And it's, almost back to where it was. It's actually a dog's breakfast. Stay away from dollar yen. Thanks, Irene, for mentioning that in the trade zone there. Now, euro, we've got a couple of levels here. I really like the look of like a bit of a double top up here around 112. New resistance and previous support, always a good level to be getting short. And funnily enough, the previous low there at 111.74 did hold that first run there on Friday. Brexit for sterling, I don't even really have to go into that too much. It's just drifting lower. And here's dollar CAD, very interesting at the moment. We had that initial move to the top side after the Bank of Canada. You see oil back at 62.94, probably supports a move to the top side. If anything, dollar CAD does look like it's, if it just clear the screens there, like a bit of a buy back towards 134.20 at this point, looking for it to keep rallying to the top side. All right, so that's pretty much where the charts are. Like, Mondays, as opposed to sort of Friday, as I was just sort of saying, I'm looking to get short some of these pairs, especially that line up with the fundamental and technical outlook. Probably not so much sterling, but Aussie, Kiwi, Euro. You can throw sterling in there if you fancy it. And dollar CAD to the top side, looking to get long there on the downside. That's how you feel by the end of the week. Thursday, Friday, you can actually sort of see the structure of what's going on. Now it's Monday. The currencies lose all momentum, and we're back to sort of square one. So those orders that I had, I did get short Aussie on, I think it was Thursday or Friday. I've squared those up and now looking for, the next opportunity. I want to see how the markets open up and react to any over weekend news before I start to really rip in. All right, guys, that's pretty much it from me. So today, Monday, take it easy. The good opportunity, if you're in that North American session or if you've got time, check out these core PCE price index numbers out of the US. They could give us a real bit of direction here on all these pairs. And there may be a few short-term trading opportunities to start with on a Monday, which is a little bit rare. And I look forward to seeing everyone on the traders meeting, especially all the new online course members. All right, guys, have a good trade week. We'll see you in the 247 trade zone. Cheerio.